What's going on, people? It's your boy Kelechi back with another episode of an update to my portfolio. I'm so used to saying welcome to another episode of the Rambling Mind podcast. If you don't know what that is, that's a podcast that I do every Tuesday and Thursday. So it's available on all podcast listening platforms. So go subscribe. We talk about business. We talk about personal finance. And we do a whole lot of stuff on there. You guys see some clips on it on YouTube. You've probably seen some episode on it on YouTube as well. So subscribe if you want to listen, if you want something to listen to as you do work and all this other stuff. Check out the Rambling Mind podcast, available on all podcasting platforms. Links are in the description. Check it out. But anyway, today is a big day when it comes to this M1 portfolio, when it comes to the stock market, when it comes to investing as a dividend investor. Why it's a big day is because the stock market had a bit of a dip yesterday. And you may be asking, how is that a good thing? How is that a great thing? Or rather, how did that happen? The reason for the dip was simply because Jerome Powell came out on Wednesday and announced that, hey, it's going to be a long road ahead for the job market. It's going to be a long road ahead for the economy. And we're not going to see that V-shaped recovery that people were hoping that we will see, that was driving the stock market, that was driving the stock markets to all-time highs in the case of the NASDAQ. And it just was making, the stock market just wasn't making sense. But once Jerome Powell said this, it drove the stock market down. So on Wednesday, from Wednesday till now, the stock market the S&P 500 has fallen about 7%. And then the Dow Jones has fallen about 8% since then. And of course, the NASDAQ, which hit an all-time high, like I said earlier, has fallen about 6%. So that just tells you what has happened in the last few days, just when reality finally hit the face, or finally hit the understanding of investors to know that this is not going to be an easy recovery. Robinhood, things were going super nice. I mean, I was all the way close to $1,000, almost hit $1,000. And then things started going normal. Things started going the other way. And for me, this is good news. I think the stock market needed reality to set in. The stock market was so disconnected from reality that it just didn't make any sense. Like I've been saying it for a minute. Main Street and Wall Street was so disconnected. It was so disconnected. You have people filing for more unemployment and more unemployment. And over here, you have the stock market hitting all-time highs. It just didn't make any sense. But after Jerome Powell came out and made this announcement, everything changed. It all balanced. It's not completely balanced out, but as of right now, things changed. Everyone is starting to understand that this is a long road ahead. And for me, and for any other dividend long-term investor, this is good news. This is when we like to buy and put extra money into the market. If you remember last week, I was talking about, you know what, I'm just going to let M1 just auto invest and do its thing. And I'm not really going to touch anything. I'm just going to keep doing the every 2 weeks, $50 into it. But with this change in news, I'm changing my thinking and my strategy a little bit, in the fact that I'm just going to be more hands-on with the money that I'm adding in here. So the main thing I'm going to be doing is focusing on a few businesses that I want to either get more dividends out of and were a little bit expensive for me to be able to buy before, or businesses that I just think have a great history ahead of them. So the two companies that I'm going to be buying with this initial slightly change is Bank of America and Realty Income Corp. I want to own a whole lot more of Realty Income Corp and Bank of America because they do pay good dividends and they have very strong balance sheets. So I do want to own those companies. The other ones, as you guys know, I'm a huge fan of Microsoft and Apple. So I would love to own more and more in Apple and Microsoft, although they don't pay the best dividends and they also are like very expensive. So I'm going to be focusing more on the financial aspect of my portfolio and the realty and the REITs of my portfolio, so I can get the most bang for buck when it comes to those companies. So for a time being, these two are going to be very overweight. And moving on into the future. The other thing that I'm going to be doing is also, I'm just going to put some money on the sides just to see how the market plays out over the next week as well, to see, does the market keep falling? If the market keeps falling, I'm going to keep buying. I'm going to keep investing and putting more money into the market so I can own good companies at a cheaper price. And that's what you want to do for any investor out there, for anybody who's trying to learn how to invest. What you want to do, you don't want to buy when everything is green and everything is flying higher and higher and higher. I mean, you do that, you do like the dollar cost average thing where you just buy consistently. But however, you want to put a lot more money when the market starts to fall down, when the market is at a cheap, because you want, just like when you go shopping for a laptop, you don't want to necessarily pay the sticker price for the laptop. If you know that Black Friday is around the corner, let's say you go shopping for a laptop in October and you know Black Friday is around the corner, you're going to wait for Black Friday, right? It's the same thing. Even though you may be putting your money every 2 weeks, consistently dollar cost averaging into the market, what you do want to do is you want to have some money on the sidelines in case something falls, a business falls because of some negative news, even though the business itself is not still doing badly or doing poorly, but just because of some kind of negative sentiment in the market, the business falls or changes value, then you want to buy that business because it's still a good business. It just had a change in sentiment. So that's what I'm going to be doing this week as far as my portfolio is concerned. And then after that, it's just going to be dollar cost averaging. I don't know if to close out this week, you guys are watching, as of the time I'm recording it, it's Friday, and you guys are going to be watching this on Monday. I don't know if the market is going to drop some more. I'm kind of hoping that it does. And if the market keeps falling, as of right now, of pre-market right now, it seems that it's starting to recover a little bit. Yesterday it was at $9. Let's go one day look. Yesterday was I was at about $908 or so, and it's popped up to $903. So I was at $800 yesterday, and now it's about $903. So I'm hoping the market drops some more. I'm really hoping to see more red so that I can invest more money, so I can get more bang for my buck. And so the next time you guys see this portfolio, it might look a little bit different. It might look very much more not on auto invest, or it might be back on auto invest where I'm just kind of letting the market or letting M1 Finance automatically invest for me. So that's all I have for y'all today. This is a good time to be an investor, a long-term investor to be specific, and we'll see how this thing plays out. Anyway, it's been your boy Kelechi. I hope y'all learned one, maybe two things out of this whole thing, and I'm gonna hit y'all up on the next one. God bless each and every single one of y'all, and I'm out. Peace.